credited with $2,100 of gold. BitGold is revolutionizing the world one account at a time, and you can become part of that revolution today by opening your account at bitgold.com. But without any further delay, here is Rick Rule. Joining us now is Rick Rule, CEO of Sprott US. Rick, we have the mining shares doing so much better. We'll talk gold and the mining shares, but right away, the HUI, highest level in more than a year. Your thoughts on the mining shares?
As we've discussed before, rebounding from oversold levels and also responding to the increase, of course, in the gold price. It wouldn't surprise me to see the market need to stop and digest its gains, but the truth is, Eric, you're a better technical analyst than I'll ever be. So in the near term, I'd rely on you rather than me. I just note for people that retrenchments, digestion, if that's the right phrase, consolidation in bull markets is natural and normal. In fact, for people who don't believe themselves to be fully invested, one way to describe a retrenchment would be a sale, and sales are, of course, good. So it wouldn't surprise me to see a hiatus in the up move, but I would suggest that that hiatus is going to be temporary.
Rick, as you mentioned, you do get pullbacks, but in bull markets, especially in the early stages, they don't let people in. So those pullbacks tend to be short and shallow, right?
Well, that's right. What bothers me more in terms of your subscribers, people who have been in for the last 2 or 3 years, is your expectation of the future is set by your experience in the immediate past. And one of the risks about a 10, 20, 25% decline, which you can obviously see in the share prices, is that it shakes people out of the market. If your expectation of the future is set by your experience in the immediate past, and your experience over 5 years is being spanked by the market, you get nervous that what you saw in terms of the increase was just a head fake, and that the market giving that back means that you're going to return to getting punished, and you get shaken out. I can't tell you how many people I watched getting shaken out of the rally that we enjoyed in 2000 to 2002. And as a consequence of getting shaken out, missed the incredible bull market that we experienced 2003 through 2006. And I hope that doesn't happen to any of your listeners.
You know, we put out a piece on this, talking about Jesse Livermore and his comments about needing to just sit tight and not outthink the market. Sometimes people try to get too cute here, Rick, and they see these stocks have rallied, and as you said, they look back on the past and say, every time this has happened, if you didn't get out, you got killed, and they lose their positions, and then the stock is 50% higher, and then they're calling you and your people and saying, what do I do now, when they should have just done nothing?
Yeah, no, I think that's exactly right. I think that's exactly right, or in fact, use a retrenchment if it occurs.
What are you doing with your own money right now? You buying anything?
Right now. We are in discussions with several companies with regards to private placements, 6 active discussions. And I'm keeping a fair amount of money dry to participate in those opportunities. At Sprott, we're also doing an institutional lending fund to carry on our bridge and mezzanine lending activities. And I will be making a substantial personal private investment in that fund. I have been also very, very recently increasing my own position in physical platinum and palladium, which is a market that has just been totally decimated. My suspicion is that we're going to have a pretty vicious strike with the AMCU in South Africa. And I don't think that the market has figured in supply disruption in the near term to the platinum and palladium price, and I think it's inevitable and imminent.
Rick, you're viewing this as a secular bull market in gold where we've ended the cyclical correction, I'm assuming, and the big bull market's in front of us?
I do. I absolutely do. I suspect that although we could see pullbacks in the gold price, I think that gold is put in its bottom. We've had this discussion too, Eric, you and I, but to refresh your listeners' memory, it is my belief that the most important component of the gold price is the acceptance of the market of the U.S. 10-year Treasury. And the U.S. 10-year Treasury's had a 35-year bull market. The yield has declined from about 15% to 1.7%. Could the yield go lower and hence the bond go higher? Yes, absolutely. But the truth is that the U.S. 10-year Treasury bull market is closer to the end than to the beginning, which I believe means that the gold bull market is closer to the beginning than to the end.
When you look at this cycle that's in front of us then, Rick, fortunes will be made, I'm assuming?
2 things, I think. With regards to me personally, I use gold as catastrophe insurance in my own portfolio. And a little bit of gold buys you a lot of insurance. But yes, I think for the greed buyer, I think the price of gold goes up. Or if it doesn't go up, at least it maintains one's purchasing power over the next 10 years. I do believe whether or not fortunes will be made in the gold bullion market, that absolute fortunes will be made in the gold equities markets.
Let's talk about that a bit further, and if you can include silver, what do you expect to see in both of those areas?
Well, my experience has been that the silver market outperforms the gold market, but it's delayed. And I suspect that past this prologue, I think that'll happen again. The silver equities have performed alongside the gold equities. I mean, precious metals equities have really acted as a class. But one would expect in a bull market, when a bull market gets underway in earnest, that the silver equities will outperform the gold equities, because silver will outperform gold in the first instance, and also because the silver equities as a class are a much smaller group of companies. There are fewer names to throw money into than there are gold. Understand that this is a highly volatile, highly risky game. And those listeners of yours who want to participate in the volatility of the silver market had better do it working very hard to select the right names. And they also must prepare themselves, A, for volatility, which will be extreme, and I guarantee you will scare the hell out of them from time to time, and also for absolute risk in terms of the equities, because there is always the implementation challenges with regards to the mining industry relative to the bullion. It is a great sector. It's a sector that has rewarded me, and more importantly, I guess in dramatic fashion, rewarded Eric Sprott, but it is a sector that you really have to pay attention to, or else you can get very badly hurt.
So it's important going forward to pick the high-quality companies, is what you're saying?
Absolutely. If the silver market gets underway, gets legs under it, you will see 100 companies in other sectors of mining suddenly add silver as a component to their name and make silver noises. These companies won't have any silver, of course, but they will attract adherents to the silver thesis, and those people will lose some or most or all of their money. It's going to be very important to focus, large and small, on the best people with the best historic track records, the best historic understanding of silver, and concentrate your portfolio, whether you're an investor or a speculator. So that's what's important to focus on, whether you're an investor or speculator. Let's go through this again. In an upturn in the silver market, given the constrained number of silver shares, the upswing that you would expect to occur in some of these silver equities will bring a lot of bad players into the market. You're going to have to focus on quality. You're going to have to focus on the best people. You're going to have to focus on the best products. It's not going to be enough to buy shares that have silver as a component in the name of the company on the certificate, Eric. It's important that our people follow this.
Rick, in closing, what do you expect to see for the balance of 2016 in that market?
Wouldn't surprise me to see the precious metals consolidate their gains and the precious metals equities consolidate their gains. But it's important to note that we're closer to the beginning of the market than we are to the end of the market. There's lots and lots and lots of upside here. I suspect that this will be a particularly attractive market for the next year and a half or 2 years, because the mistakes that the investors have made in the past, the mistakes that the management teams have made in the past, will be fresh in their mind. I suspect that we'll get 2 years of enjoyment out of an increase in commodity prices while still being cautious and remembering the good lessons we learned in the prior bad market. I expect 2 years of very